ETrade has just been acquired by Morgan Stanley for $13 billion. An unbelievable acquisition, but it's not something that we didn't foresee happening. I'm going to give you my thoughts and opinions on this and more on how this might affect you as an online trader coming up. Yeah, guys, so ETrade is the next chip to fall. We talked about this back in November when everybody went to zero commissions, that we weren't sure how sustainable these businesses were going to be without help moving forward. And sure enough, TD Ameritrade was the first big chip to fall when they were acquired by Charles Schwab. And now ETrade has been the next victim. And so where are we headed now? How does this affect you as an online trader? And how could this affect also Robinhood users moving forward as well? Well, I'm going to get to all that in just a second, but first I want to welcome you to this channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I made it my mission to help you own it. So if you want to see more content such as this, learn how to trade, learn how to invest, and learn the markets, then please subscribe to this channel and hit that thumbs up button, hit that notification bell. You all know what to do. I certainly would appreciate the support. Helps this channel grow. And so here we go with today's story. So Morgan Stanley just acquired ETrade. Like I said, something that I called back in November, and whether or not it's a good thing, well, we'll hear about my opinion in just a second. But first, the facts. So in case if you don't know who Morgan Stanley is an American multinational investment bank, and they have financial services companies. They have about $2 trillion in assets under management. Just to kind of give you an idea of how that compares to some of the larger ones, Goldman Sachs is about $1.5 trillion assets under management, Fidelity about $2.5, and then Charles Schwab coming in with a whopping $3.25 trillion assets under management. So, you know, those are the major competitors in that space. And so for Morgan Stanley to come in and make this acquisition of ETrade, I think that it was a really good move on their part. But when you compare Morgan Stanley to some of these other firms, it kind of leads you to asking the question as to why. And I wanted to go ahead and let the CEO, James Gorman, answer that himself.
We've had a strategy in place for a long time to continue to diversify and build out our balance sheet like businesses. The Smith Barney transaction, of course, was historic back in 2009. Solium we did. Mesa West was a small asset management deal. I've always felt that ETrade was an incredible brand, an incredible company, had great technology. We're clearly doing stuff on the digital side at a pace that was ahead of where we were. So we had that constant debate of sort of build versus buy. And, you know, we felt we're in the condition to make a bold move, and we went for it.
So what the CEO actually didn't disclose in that interview, but did end up doing it in another one, is that this CEO has loved ETrade for a long time. And it's been his mission to try to acquire them in some sense for almost the better part of 20 years. When he was working with Merrill Lynch, he actually was in talks with them about buying that company before. He really does truly love the company from a personal standpoint, but it really just made a whole lot of sense from a business standpoint as well. But what I thought was really interesting was when he was asked about Robinhood and why he decided to go after ETrade instead. And I thought that his answer was very compelling.
Well, I kind of like ETrade's business model. I mean, they've got a lot of clients. They've got a huge workplace stock plan business. They have one of the best digital online banking businesses in the marketplace, and they sit on $600 billion of assets. So added to us, that's $3.1 trillion. You add their stock plan business to ours, we're sitting on $600 billion. We have $21 billion now in combined wealth management revenues, takes our margins above 30%. It's not comparable. You know, Robinhood is a completely different kind of business. So I like real businesses, real clients, real revenues, real profits. They've got all of it.
So as you can see, in a pond full of big fish, ETrade was the clear better option to go after from a revenue standpoint. And it actually increases Morgan Stanley's profit margins now by over 5%. At their last quarterly report, their profit margins were around 25. And now with this acquisition of ETrade and the $600 billion in assets that they're going to be acquiring, their new profit margins are now projected at over 30%. So that is quite a jump, and that is a jump that they could not even come close to acquiring with Robinhood. And now that you have the facts, here is my opinion. Ever since the acquisition of Charles Schwab, and really it dates back a little bit further than that, ever since Charles Schwab decided to go zero commission and everybody else had to follow suit, that is when you started to see the writing on the wall for a lot of these companies. It was only a matter of time. And we talked about this way back when all this started happening, that this is what was going to be taking place. And despite seeing the writing on the wall, I'm still not a fan of it. Just because I was able to foresee this coming doesn't mean that I'm happy about it. I like the fact that there were multiple players in this space, especially when it comes to online trading, because there really isn't that many out there to begin with. And now the amount of players are shrinking. This doesn't make for a good competitive environment. And I'm concerned about the quality of the services we're going to be receiving from these large firms now that they have complete control over them. Do I have any Comcast TV or internet providers out there that, have to settle for the lousy customer service that they have because there is no other option? So that is where I fear we are headed as far as this space is concerned. Not to mention, as we also were able to foresee, we're experiencing more horrible order fills from the likes of TD Ameritrade and their Thinkorswim platform. And I don't see that there's going to be a brighter light at the end of this tunnel. Maybe I'm wrong. And honestly, I really do hope that I'm wrong, and that I hope that the acquisition from these larger companies allows them to put more money into these businesses so that they can actually improve them. But in more cases than not, it usually ends up complicating the process and really making it that much worse. So from that viewpoint, it's really hard to be optimistic about this move in general. But again, I understand and realize that it really was kind of a no-brainer for Morgan Stanley to try to acquire them. Now, as for the big question as to who might be next, who's going to be scooped up like ETrade and TD Ameritrade were, and I think, in my opinion, that it's going to be Robinhood, and I think that Fidelity ends up scooping them up. We'll see how that all plays out, but Robinhood's days are numbered. It really is only a matter of time. And Fidelity seems to make the most sense. They do have a online trading program already. It's kind of garbage. And so I think that if Fidelity actually wants to continue to compete in this space, that they're going to have to acquire something like Robinhood that appeals to millennials. Millennial generation is one of the largest generations compared to baby boomers. I think that I haven't looked up the recent statistics, but I'm pretty sure that millennial generation is actually larger than the baby boomers generation as well. So I think that if there's going to be a company that goes and acquires Robinhood, that it will only be good for their company because of the online app technology that they have as far as being able to easily buy and sell stocks. I'm not a fan of Robinhood by any stretch of the imagination, but the only other company that I could see coming in and swooping them up is going to be probably Goldman Sachs, perhaps. Goldman Sachs was also in talks with ETrade to acquire them along with Morgan Stanley, and it seemed as if Morgan Stanley just was the more appealing move. But, maybe Goldman Sachs decides that they want to go after Robinhood. But, again, at the end of the day, I don't think that there's any case that can be made where Robinhood actually comes out of this unscathed. So in my opinion, I think it's only going to be a matter of when and not if Robinhood gets acquired and by who. So there you have the facts. You have my opinion. And now I want to hear from you. Leave me some comments down below. I respond to all of the comments, no matter if it's good, bad, or ugly. I love to respond to it. I love interacting with you guys. So let me know what you think. Do you think Robinhood's the next one on the chopping block? Who do you think acquires them? And what do you think about this current acquisition of Morgan Stanley taking over ETrade? Do you think it's good? Do you disagree with me? I would love to hear your comments and thoughts and opinions down below. And so that's going to do it for me. But before you go, I would like to encourage you to check out the links down below in the description. If you're interested in learning about the stock market, how to invest, and how to day trade, I would encourage you to come over to WeTradeHQ.com. I have a live mentorship where I go over my trades for the day, how I plan to execute them, and it is a great community to be a part of. So if you're interested in checking that out, again, the links are in the description below. I would love to see you there. So again, if you like this video, I would certainly appreciate the good old thumbs up to show me some additional support. And if this is your first time watching this channel, I certainly would also appreciate a subscription and hitting that notification bell to get notified every time I put up a video. I put them up on Mondays, Wednesdays, and Fridays. And then I also go live on Stockwatch Sunday at 8:30 p.m. Eastern Time. So again, guys, thank you so much for watching. As always, I will see you all before the bell, and B. Smith is out. That they would not be raising capital in the form of an offering or otherwise because they felt they were doing well enough that they didn't need any additional money. But then he went ahead and put out a $2 billion offering, which begs us all to question, why did you lie to us, bro?